So I can get re-rated 4 times higher, a 400% appreciation. My market cap can go from 200 million to 800 million by silver going to 30. Silver's the only asset class under the sun that hasn't surpassed its 1980 high of $50.
If you are curious where some of the smartest money in the silver sector has been investing, then you're going to want to listen to this interview. The shareholder base of Dolly Varden Silver includes names like Eric Sprott, Frank Giustra, US Global Investors, Fidelity, Hecla Mining, and many, many more. Today, I'm going to be joined by Shawn Khunkhun, the president and CEO of Dolly Varden Silver. Enjoy. All right, Shawn, thank you so much for joining me again today. It's great to have you back on the show, man.
Thanks for having me.
Okay, so we're going to talk about Dolly. Obviously, there's actually a handful of directions that I want to go today, but you've always got an interesting take on the precious metals sector, high level. So I want to start there. What's catching your attention right now, Shawn, in the precious metals market?
That's a really good question. I was talking to a friend who runs a little junior gold explorer, and he said something along the lines of, if you say to me, this is the worst you've ever seen it, like I can't hear that anymore.
Yeah.
So I guess a lot of people are saying that, like they've never seen it this bad. And so I find that encouraging, because when everybody is really bullish and are convinced and have a high level of conviction, that's usually time to be taking some profits. So I think I'm quite encouraged that we're in an environment right now where we've had the gold price double over the last, call it 8 years. December 2015 low was around 1,000. We've got $2,000 gold here. You've got gold in every currency doing really well. I'm looking at the gold equities, and they're making a lot of money. Like I was looking at, our largest shareholder, Hecla, and I'm looking at where they were in Q1 and where they ended in Q3, and they've got mines like Greens Creek or Lucky Friday that are spitting out like 30 million in cash each mine.
Right.
And so I think what the gold producers are seeing is there's these elevated precious metal prices are leading to more profits.
Sure.
And so I think that's going to play really well as they exited Q4 and we get into Q1 and the price is stable up here. And we're in an employment environment where there isn't sort of a big pressure on labor. You go back a couple of summers, Jay, and there were companies that were literally waiting at the airport handing drillers $10,000 signing bonuses because there was such a shortage of labor. But with the level of activity from the financing side contracting and labor being a 50% input, and the highest cost for any operation, that, not being in that frenzy labor market, you can get incredibly talented people. You don't have to pay them an absurd wage, and you get high metal prices, and it leads to a very profitable environment. So I don't know, for me, I take a long-term view, and I've been doing this for 20 years, and I don't chase sectors. I'm a mining investor. I'm a boring gold, and if I'm feeling exotic, silver, and if I'm really feeling exotic, maybe copper. So I'm not your typical speculator.
Sure.
And so for me, I just think, I know there's going to be a tremendous wealth creation because I've been studying it my whole life. I've put in the time, I put in the work. I've had 20 years of experience, and all that experience tells me that we are going on a run. And it's going to be a 30% move in the price of gold. And if the low is in here, we are on our way to 2,600. And that move is happening as early as May, potentially July, or at some point in the next 6 months. And there's a lot of research and time I've put into looking at momentum, looking at fundamentals, looking at supply, looking at demand. But the biggest takeaway for me is we're in an environment where, let's take a look at a company like Newmont. right?
Yeah.
And I was actually guys at your conference, guys like Garofalo and Still, that really reinforced this idea that you take a company that was Goldcorp or Goldcorp Newmont, you take Newmont and you look back 15, 20 years, they're producing the same number of ounces they were producing decades ago, but they've had to do extremely dilutive transactions like buy Goldcorp, like buy Newcrest, just to maintain their production profile. So do you want to own the majors? Or do you want to go down a tier and look for a company that is either finding ounces or growing a production profile that is going to be an attractive target for the Newmonts of the world?
For sure. And I love the the bearish sentiment, the image of the investor kind of banging their head against the wall, like, can it get any worse from here? I agree. That's the most bullish signal you can see in the market. And you mentioned the majors. And I think Hecla, one of your largest shareholders, also one of the fastest growing silver companies in the world, like an amazing partner there. So transitioning then to Dolly, you just mentioned Newmont, right? You're in the same neighborhood that Newmont's purchased a handful of mines. I think about $5 billion in transactions in the Golden Triangle of British Columbia in maybe the last 6 years, right? That's where you guys are at. So good segue into Dolly. What's the significance of the Golden Triangle? What's the significance of good jurisdictions? Because I look at the track record of transactions and value created there, and I'm like, okay, good jurisdictions. It's like, a good entrepreneur tends to keep on winning. Good jurisdictions can tend to keep on delivering. And so why Golden Triangle for you guys?
Yeah, and it's funny because there is, like, if we were a fly on the wall in a boardroom of the biggest precious metals miners in the world, so this is the Barricks, the Newmonts, go down a tier to the Agnicos, and there is a push at the board level, which is responding to shareholders, which is responding to the money, and the money wants to be safe. The money does not want to go down to jurisdictions where the government may say no. And whether it's higher taxes or whether it's we don't want an open pit mine. So investors are telling boards of these major mining companies, Canada, Australia, United States.
Right.
That's where we want to be.
Sure.
And so the Golden Triangle, we're in Northwest BC, we're in Canada. It's long, stable, history of mining. And the other thing that's happening in the Golden Triangle, because unlike other parts of Canada, whether it's the Red Lake Camp, or you look broader at the Abitibi, an area that starts in Ontario and goes into Quebec, that's produced 200 million ounces of gold. Those are mature camps. There's highways and power lines and the easy pickings are gone. And that's why if you look at global production grades, they're going lower and lower and lower and lower. And companies are having to go deeper and deeper and deeper to get marginal material.
Sure.
Thank God the technology to find this stuff has gotten better.
Yeah.
But my point here is the Abitibi versus Northwest BC. Up until a few years ago, Northwest BC had no power before Bruce Jack, the Northwest Transmission Line. The Deepwater Seaport hadn't been upgraded like it has now. The roads like Highway 37A that go into towns like Stewart weren't paved. So if you go back in the history of the Golden Triangle, it's been there for 100 years. And let's just go back to the 90s. Gold's $2.50 an ounce. Barrick's flying gold out of SK Creek up in the Golden Triangle. And it was profitable at $2.50 gold using an aircraft to move the material.
Right.
You've now got roads, power, and not $2.50 gold, but $2,000 gold. So for me, you've got to be a first mover in an area. I made a decision to try to be a first mover in the north because I was inspired by Bob Quartermain at what was Silver Standard, which was then Pretium, which is then Newcrest, which is now Newmont. And the $5 billion of transactions doesn't factor in the most recent big boy transaction in the area, which was Newmont buying Newcrest.
Sure.
And so you've got two operating mines, but that it's not what the key that I actually am not pointing out here and highlighting is it's the best geology in the world. Like the mineralizing events that came in here, the Eskay Rift, it's produced 1 billion ounces of silver discovery and 150 million ounces of gold discovery, but we've only had access to this area in a modern way in the last couple of years. So if you go back 30 years, there was only 5 million ounces of gold discovered here. It's been the last 3 decades that another 150 million, and why? Because now you've got access.
Yeah.
So when I look at this area, I know it's the richest 20 kilometers on the planet. That's KSM Brucejack. What I'm trying to do at Dolly is I'm in the shadow of the richest, biggest gold and silver mines on the planet. I've now got cheap access in terms of infrastructure, and it's incredibly rich geology. So when I came in here 4 years ago, my vision was if I brought capital, science, and if I was patient, could I build that mineral inventory that would attract the Newmonts of the world?
Right.
And I think we've done a pretty good job over the last 4 years in what some are calling the worst mining market for juniors they've ever seen.
Well, let's dive into that because it was about 4 years ago, and if I recall correctly, you were in a boardroom December 2019 with your team, the new Dolly Varden team.
Good memory, Jay.
Right? Outlining your vision for the company. Yeah. And it was a simple vision, but the right one, which is increase the ounce count. I mean, that's the vision that every investor wants to hear, right? And here you deliver on. So walk me through the value creation from that point. What was the resource? What is it today? What have we accomplished thus far?
And I got to say, 4 years ago, I was lucky that I put together the right team. And I got to give a lot of credit to Rob McLeod, because it was Rob who really drove the vision. As much as I'd like to take credit for the success that we've had at Dolly Varden, it's Rob McLeod, it's our chief geologist, who's now our VPX, Rob Van Egmont.
Yep.
It's the whole team of scientists, and it's the people you never hear about, and the bankers that brought us the funds. I've just been very fortunate to have put the right people around this company. But the vision was, we were unsure at that moment. We looked at our project, we knew there was 40 million ounces of silver in the ground, because that was the resource.
Yeah.
We knew it was a past producer. It was a great history. Jay, the richest silver mine in the British Empire, the sun didn't set on the British Empire, and this was the richest silver mine in the British Empire. It was Canada's 3rd largest silver mine. So I inherited an incredible history, and then I had people just north of me like Walter Coles at Skeena, who had the idea about reawakening past treasures in the Golden Triangle. He partnered with Ron Nedolitsky, who had made huge discoveries in the area. And it was really the people the pioneers and the explorers over the last 100 years that have paved the way. And the province going, what if we built it, will they come? So it was the people like the Nishka or the Taltan that said, hey, we want more for our people, right? So, I just, this road was paved by people like Bob Quartermain. So when I showed up, I had been working for mining companies for 15, 16 years. I just had the idea, a very simple idea, that silver outperforms gold in bull markets.
It absolutely does.
And so I thought, you know what? I've devoted 15 years of my life to gold. What if I went heavier weighting on silver?
Okay. Big swing.
That was my big idea.
Yeah.
And so I asked Rob McLeod, because he'd grown up in Stewart, just north of the project.
Yeah.
I said, hey, Rob, what do you think of Dolly Varden? And then I called a mutual friend, Ivan Bebic, who I didn't know at the time. This was October of 2019. And I said, Ivan, I'm looking at this area. I'm looking at a 40,000 foot level, and I see Homestake Ridge, and I see Dolly Varden, and I see Hecla, and I'm reading the history, and I see this as one project. Are you open to doing a deal? And he was like, who is this guy calling me? And I'm not sure, but potentially. And so it was like that moment in the movie Dumb and Dumber where it was like, so you're saying there's a chance, right? And that's all I needed.
Yeah.
I needed a little light. That door just opened a little bit, and I jammed through, and I brought $75 million to the table.
Yeah.
And I convinced Eric Sprott to get behind me. I convinced big institutions to get behind me. I convinced an incredible technical team, and we've made discoveries. We made an accretive acquisition. We've now increased the mineral inventory. We've now got, in all categories, 140 million ounces of silver.
Yeah.
The company has grown from 20 million to 200 at a time where our peers are going from billions to hundreds of millions.
You're talking market cap. Yeah.
Market cap.
Yeah.
The share price has grown up by 300%. So that's a return on my investors who got behind me on day one. That's hard to do and to maintain. And we've done it. And I feel the toughest thing to do is to launch, to have the rocket fuel to go. But once you go, it's very hard to stop that momentum. And all the mistakes I made in my first 20 years in this business are helping me make fewer mistakes today. And, bring in a team, align them with shareholders, be transparent. We're going to make mistakes, we're going to fail, but we're going to get back up, and we're not going to take on debt. We're always going to have cash in the bank. We're always going to communicate. We're going to over-communicate, and that's why I'm here. I got to tell people what we're doing all the time, and that's a big part of my day.
I got to ask you, you talk about the capital raising, you brought 75 million to the table. That's the biggest challenge for so many junior companies. And you say the hardest part is launching. Well, part of that's because raising cash is really, really tough, especially the last 24 months. And so I need to pull on that thread a little bit. Your shareholder base, we touched on it. You're near 50% institutional, like 47%, I think. Hecla 15%, Eric Sprott somewhere around 9%, I believe, and those institutions, US global investors, people that my audience are very familiar with, Frank Holmes and his team.
Fidelity. Sprott,
that's right.
Yeah, just goes on.
Okay, so how are you raising the cash? Like what is it right now about the team at Dolly Varden and the project that's turning heads when so many companies cannot turn heads right now?
So I've got a friend who runs a $2 billion fund. And when I first met him 10 years ago, it was a $10 million fund. And I've gotten to know him for 10 years. And he's given me money for years. And I've gone out and tried to do stuff with that money in different companies and at varying levels of success, sometimes failure. And he would keep giving me money. And his message to me was, you put the money in the ground, you always are honest about what you're doing, and I'm going to keep backing you because I know like that work ethic is going to lead to success. So we were putting up a financing, and it was a tough financing. We launched on a day where silver was getting hammered.
When was this?
December of 2022.
Okay.
And it was a tough financing, and he took a third of the deal. It was an $18 million deal that we launched on. We ended up closing $22 million.
Yes, right.
And I've got those types of people in my life that have gotten to know me for a couple of decades. And so that's the difference. It's having incredible people who have had success, who believe in what we're doing.
And you did put that cash to work in the ground. I think you guys drilled 51,000 meters in 2023 off the heels of that raise.
Yeah.
So walk me through what you found. How has the company changed materially during that drill campaign?
The way I look at Dolly Varden is you've got this 15-kilometer trend. And there's two main centers of gravity in terms of like the mineral endowment. Mm-hmm. So you've got a 45 million ounce high-grade silver base in the southern part of the property. And then you've got 1 million ounces of gold and 20 million ounces of silver in the north. And they're separated by about 5K, okay? And this is probably an understated estimate because this is as of 2019 and we've probably significantly added to that. So one of the areas that we're seeing a lot of success is, so there's a big mine on the property. It's called the Torbrit mine. There's, of the 44 million ounces, 35 million ounces of high-grade silver at Torbrit. Next to Torbrit, we've made a new discovery called Wolf. And it was actually, like, I've got all these incredible scientists that are around me, people that worked at Newmont for a decade, people that are currently working at Hecla, just incredible scientists. It was actually this young geologist, Amanda Bennett, the youngest person on the team, who made the breakthrough discovery at the Wolf deposit. And it tells me that she's hungry, she's smart, and she was willing to sift through all that old data and take a risk. And we gave her the budget and we supported her, even though we thought there's probably silver, like silver probably does not exist below that sedimentary cover, and we can't see it. And this is an expensive shot, but we needed to, we needed to get behind her, and we did, and she was right. And where we've added, I think, tens of millions of ounces of silver, and what could be the next Torbrit mine on the property is Wolf. And that's what's encouraged Hecla to increase their stake in the company from 10% to 15%. So that's one area of growth, is the Wolf deposit. That's significant. I don't want to underestimate all the success we're having there, but there's a new story developing at Dolly Varden. And that new story is up at Homestake Ridge. And again, we've got a senior member on the team. He would not like me describing him like that, but he's got a lot of experience. His name's Andrew Hamilton. So after Amanda joined the company, he joined the company. They were both working together, and he kind of helps mentor her, and he's an incredible guy. And Andrew said, Shawn, there was a hole I wanted to drill in 2022 that we never got to. And I was like, well, then we got to drill it in 23. And we did. And we tagged 93 meters of 357 grams of silver EQ. Okay, so it's like 12-ounce silver equivalent over, and we've established this 100-meter deep, 100-meter wide zone that is like a jewelry box. Like, it is incredible. It's silver, it's gold, and Andrew wanted to go after it in 2022. We didn't have buy-in from everybody on the team, but I was adamant, like I was with Amanda. No, we need to get behind our people, and we need to give them the shot, and he hit it.
Good for you.
And so that's interesting, because that to me is better than Torbrit. It's better than Wolf, and it's up at Homestake, which Homestake was known for the gold, not the silver. And then what's crazy, what totally blew it out of the park this year, was our VPX, who is a guy, when I met him, he was the chief geologist on the project. And what I've seen, the greatest growth I've seen from anybody at Dolly Varden, is Rob Van Egmont, who has grown from our chief geologist to our vice president of exploration. And he had an idea that was, maybe there's a relationship between this silver-dominated zone up at Homestake and the gold-dominated Homestake main deposit. They're separated by about 350 meters. So he planned a hole. It was outside of the resource. And he hit something, Jay, that looks like the color of the walls, that looks like the color of the ground, the color of your shoes. It was very unassuming. It was like white core. And there's like, normally when you hit something, you know it, especially on this project. I get a call, hey, we're into kilo material. Like, it's like the alarm bells are going, like it's excitement, it's enthusiasm, it keeps us going. Crickets on this drill hole. Crickets. So much crickets that hole is still at camp. Like, it wasn't brought down to, hey, Shawn's going to need this to take it on the road to show investors. Crickets. It's at camp. We get the assays. Best drill hole projects ever seen. It's Brucejack-like. It's this quartz, carbonate, stockwork veining. Is it electrum? Is it the next Brucejack? What are the numbers? 12 meters of 80 grams of gold. So in a silver dominant zone, we stepped out and we hit something brand new in between two monster deposits. And there's a 2.5 foot core of that's grading almost 1,400 grams of gold. And it is the greatest hit the project's ever seen, and it was one of the last holes we drilled this season.
Right.
And so, when we look ahead at 24, we're going to get up there and find out how big this zone is.
Yeah.
But if it's got legs, so I'm going to step it back and take off my promotional hat for a second. And what do we have? We've got 140 million ounces of silver. And under the current silver to gold ratio, which is absurd, and I'll get into that later maybe if we have time, but it's essentially like a 2 million ounce gold equivalent story, which is great, but is it enough to warrant the interests of a Newmont?
Right.
Probably not.
Okay.
They're looking for 10 million ounce deposits.
Yes.
But I think this gold zone has the potential to take us maybe from 2 to maybe 3 million ounces gold EQ. And so that begins to get exciting, maybe again not to a Newmont, but maybe to the companies that are one tier lower.
Sure.
But it's I know it's good times at Dolly when you're hitting. It's easy when you're winning, and we're winning. But it hasn't always been that way, and I think it's important for your audience to know that we have navigated moments where the silver price dropped to $11.94 an ounce. We've navigated those moments, and we've navigated situations where I've had a shareholder come to me and go, I need to sell 20 million shares.
Okay.
And we found elegant solutions. That problem becomes an opportunity to bring a new institution into the name.
Right.
The silver ETF just puked out a whack of stock. We've got a great retail following that was there to absorb it. So every challenge has been met with an elegant solution.
And then worth mentioning, when you say 140 million ounces of silver, you could increase that ounce count if you chose to drop your grade cutoff, but you've been very disciplined with that, and I believe because of conversations you've had with Eric Sprott about let's only focus on mineable ounces here. Let's not just get the numbers up for the sake of press releases.
Yeah, I went to Eric when I was contemplating buying Homestake Ridge, and he was a 19% shareholder. The company was tiny at the time, and I said, hey, Eric, what do you think of this idea? And he just said, no. He's like, no, that's your job. Like, I trust you for, those are your decisions.
Yeah.
And all I asked, he said, was do things that are real. Like, I'm not interested in an ounce will never mine. I'm not. Don't give me this 1 billion ounce inventory of uneconomic. I want to know what's real, and so that's the standard. The standard is. And even when it comes to when we put out our financial statements, like we want to be the silver standard in the industry of we want other companies to emulate what we're doing. When we put out a press release, it might be really long, but there's 8 images, there's full transparency, there's, and that's what we're trying to achieve.
Okay, I love it. Now, revisiting 2024 priorities, talk to me about cash position and the intention to go back to the market, and what are the key deliverables you're hoping to hit on for 2024?
What's crazy is when you have money, people offer you money.
Yeah.
And I get offered money every day.
Okay.
But I only want money from people who good business is boring. Good business takes time. I don't know how long this is going to take, and I need long, sticky money.
Yeah.
And what I envision is a lot of companies rely on what I would describe as like the valet parking, or where somebody comes in to your stock or your company and they want to be there and they don't want to hold the trade over the weekend.
Yeah, right.
I want the shareholders that are willing to get parked down at P10. And I don't know when you're getting your car back, right? And that doesn't sound very attractive to most investors, but if you're a miner and you want ounces, and like when I talk to companies or when I talk to the Nishka, the plans are not for today, they're for the next century, they're for the next generation. That's how we need to be thinking and planning. You look at one of the greatest wealth creations, the greatest, the China's boom over the last couple of decades, how have they done it? They're not on the 4-year electoral cycle of, I'm going to make you a promise, I'm going to write a check that I can't cash. They're looking at it and they're planning in a way for the future. That's how the industry really operates.
100% it does.
So that's how Barrick operates, that's how Newmont operates, and that's why those companies have 100 million ounces of gold in the ground and they're planning for the next 100 years. And so can a junior take that approach? You can if you have the right shareholders. If you've got a billionaire that owns 9% and a $4 billion company that owns 15%, and they're not worried about fluctuations, and if you communicate with them and you're honest with them and you work hard for them, they'll back you all day long. So to answer your question, I'm looking for new partners always. I go all over the world. I'm on the phone all day, and I'm out there looking for the next group of institutions, and that's why the institutional interest in this company is at 47.5%, and I make a committed effort to increase that. So I'm looking for long, sticky money. We've got 9.3 million in the bank as of this morning. None of that needs to go anywhere. It's not flow-through money. There's no expiration on that money. We're not spending any money right now in a meaningful way, and we won't be for months to come because the drill is not turning. And so I don't have a big burn. And what I'm looking at right now is I'm looking at what's the best use of our dollars. Let's take a step back. Let's take this moment in the market right now to really examine what's going to drive the most value. Is a new mineral resource estimate going to drive the most value? Is following up on this new discovery going to drive the most value? We just put out our last results about a week ago. So the team has given me a plan for where they want to go. And remember, like, I've got the Andrew that wants to go this way and Amanda that wants to go this way and Rob. And so I've got to, with the technical committee that includes Michael Henriksen, who's with Newmont, it's their head guy, structural geo for 10 years, Kurt Allen, who's the current VPX of Hecla, Rob McLeod. So rank these targets and let's go out and drill. So we'll be putting out our plans shortly. We're financed to get started. And just depending on how ambitious we want to be, if I find the right partner, like we were in a situation where we had good results. I showed them to Hecla and they gave me $10 million and we closed it in November. I'm having a lot of conversations with great investors. I'm showing them what we have. If the right partner comes with an opportunity that I think is an accretive opportunity for our shareholders, maybe we get really ambitious this year. But we've got money to continue to go, to start drilling, to work on those priority 1 targets, and if good money shows up, maybe we go to those priority 2 targets. And if enough good money shows up, maybe we go to priority 3. And but I hope that answers your question.
Yeah, and that patient approach is so undervalued, not just in our business, but in general in the investment landscape. And it was the number one conversation at my conference in January in Vancouver was time horizon. And guest after guest joined me on stage and reminded the audience that trading share prices and investing are 2 very different things. And many people think they're investing, but they're just looking to trade a share price, right? When the real money is made via duration, right? Patient, trust your process, right? And especially in this business, I mean, in the mining sector specifically. Okay, last question for you. I have to ask you to elaborate on the gold-silver ratio. I think you called it outrageous. So maybe touch on why and how that would impact your gold equivalent reserves.
So when I came into Dolly, everyone said to me, what are you doing? It's too small. The grade's, no good. And I thought, what are they talking about? Like, this is a 300 gram silver average grade deposit. This is top 1 or 2 in the world. But what I didn't realize is they were looking at it through a gold equivalent lens.
I see.
Using like a 80-to-1 ratio. And so when you look at it in that lens, okay, it looks pretty, as my son would say, it looks pretty mid, or
Okay.
it looks pretty average.
Yeah.
So I don't look at it that way. I look at it as silver, and it's primary silver. And so what I actually think, and I don't share this with anybody, but I believe, because this is what I experienced, historically the ratio has been 15 to 1. Okay? Naturally, in the Earth's setting, it's 16 to 1.
Okay.
So for every 1 ounce of gold that are in the Earth, there's 16 ounces of silver.
Mm-hmm.
Historically, you go back to the 5,000-year history of gold and silver, it's been 15 to 1.
Okay.
Okay? We're mining, for every 1 ounce of gold we mine 7 ounces of silver.
Okay.
All the gold that's ever been produced is still with us. 2 Olympic-sized swimming pools worth of it.
Yeah, it's not much.
It's not much. The silver, though, because it's not worth as much as gold, it gets sort of discarded, particularly if it's used in industry.
Yeah.
And what's happened is...
Industrially.
Yeah. So gold is money, jewelry. Less than 2% of gold gets used in an industrial capacity, whereas 70% of silver gets consumed by industry. Mm-hmm. And if you look at the demand for silver, we had a 237 million ounce deficit in 2022. I haven't looked at the numbers for 2023, but they were forecasted to be about 170 million ounce deficit. So you have 400 million ounces of silver that we fell short on from a mining perspective. And if you look at the case in terms of the uses, the solar industry's gone from 3% of the market to 14%. It's a big rise in the last decade.
Sure.
But it's on pace to go to 50. And so one industrial application is going to take 50% of all mined silver. Mexico is saying no more open pit silver mines. The world's #1 silver producer is saying no more. Mm-hmm. Where are we going to get this silver from? And if you look at the fact that most silver, like 72% of it, comes as a byproduct, not from a primary silver mine like the historic Dolly Varden Silver mine or the Torbert mine. If you look at how difficult it is to get a copper mine permitted, how many billions in capital expenditures we're going to come into a silver shortage.
Absolutely.
We're already seeing it manifest in the last 2 years. And so my point is, if historically it was 15 to 1, and today it's 7 to 1 from a mining perspective, and we're already seeing these hundreds of millions of ounces. There's a reason I'm here, Jay. There's a reason I went to Dolly. It's not because I'm seeing something that's coming, and I don't know if it's this year or next year, and I don't really care. But when it happens, forget, right now we're like 85 to 1 silver to gold.
Yeah.
That's absurd.
There's got to be a reckoning.
There will be a reckoning. I saw one early in my career. So in 2011, and this is my story. My story is I built a gold mining company from inception to $1.4 billion when I was in my 20s. And it was like blood, sweat, tears, luck, timing. I needed everything to go right for this thing to happen. I made more money speculating in silver in 6 months in my underwear than I did working on this gold mine.
Yeah.
So my lesson this time around was go to silver and go big. That ratio then went to 30 to 1.
Right.
Silver went from $4 to 49.
Yeah. That was a crazy run.
This run, on average, is a $15, $16 basing period for the last 10 years. This run's going to start in the early 20s. Eric Sprott thinks silver could go to $300 an ounce. There's no silver out there. And so gold is going to go higher. Silver outperforms gold. It's very simple. I'll leave you with this, because I know I'm probably going, this is way more information than you wanted. But when I took over Dolly, we were trading at 40 cents an ounce in the ground. Actually, it was 37.5 cents an ounce in the ground.
That's right.
And what attracted me was the industry average was 75. It's twice.
Okay. Yep.
So I thought, it's an easy double.
There's some upside there.
We went from 40 to $4 that summer, because silver went from 16 to 30. So at $30 silver, my ounces are worth $4 an ounce in the ground. At $30 silver. Right now I'm trading at $1 an ounce in the ground.
Yeah.
So I can get re-rated 4 times higher, a 400% appreciation. My market cap can go from 200 million to 800 million by silver going to 30. Silver's the only asset class under the sun that hasn't surpassed its 1980 high of $50. I look at so many factors in terms of inflation. What is the inflation adjusted price of that 1980 high? And so I'm not talking $50 silver, I'm not talking $100 silver, I'm not talking $300 silver, but all I know is I'm going to keep finding more of it. It's in a safe jurisdiction. We've got size. I think we've got the right approach. This company has the potential. Like when I started, it was an irrelevant, tiny little company. My goal was to make it a top 10 silver equity. I'm sitting at like number 33 today.
Okay.
I've got some more work to do, but we've got an incredible project. We've got incredible people. And if I have to grow, maybe I even take advantage of this environment and I pull another Homestake Ridge.
Yeah, you're open to it.
Absolutely.
100%. Yeah, okay. Go to silver and go big. I think that's the headline, Shawn.
The headline is, silver is money, Dolly Varden is silver.
I like it. All right.
Okay.
Hey, look, thanks, man. Thank you so much for coming back on. It's always good catching up with you.
Thanks for having me.
Of course.